Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Charter Market Technician and Portfolio Manager. Thank you so much for joining us this week in this week's edition of the Market Carver. This week, we're going to continue to talk about the labor market, something that's been in focus for much of the last several months, and we'll unpack the most recent data, what it might mean. And then Andrew's going to take a look under the hood at gold and what I think is really interesting and unique way to look at that asset. So you hang tight for that and we'll get right to it. But we'll start with the labor market. So we got the last month's jobs report. And what we see is a labor market situation that has continued to deteriorate. The panel on the left here is showing you the change in month over month payroll. So how many jobs are added to the economy each month. And that has been hovering really close to zero for much of the year. In fact, we got some revisions here after that non-farm payroll report, which actually showed the amount of jobs that added has been significantly less than initially reported. So, a lot of what's been in the news and what is being unpacked is just how this data is collected. And there's always been a real lag and an art in trying to figure out this data because the real quantifiable, accurate numbers take some time to get. So those revisions can often cloud what is originally reported, but any way you slice it right now, the data is not great. On the right panel is the unemployment rate, which has begun to tick up. So it is important to keep in mind that what we don't see here is an economy that's falling off of the cliff from a labor market perspective, but it certainly got the attention of the Federal Reserve, and we fully believe they will begin at least a rate cut or two this year to begin to try to head off that pass and keep it from falling off a cliff. So we see a slowdown in hiring, but what we haven't seen yet is any sort of acceleration in firing. That part of the cycle is much harder to stop. And thankfully, we have not seen that yet. But when you look past this initial data and you look at other things like how long are unemployed folks staying unemployed, it's getting longer and longer to take to find that job. If you look at the number of hours worked per week, that has been tailing off, all pointing to a pretty soft labor market picture, which hopefully a Fed rate cut or two could kick in and keep that from turning into a worse situation. So far, that's the way the market has reacted and sees that rate cut looming as a good thing for the market. And as always, we'll just hope that that's in time. So that's the labor market picture. Andrew, as promised, a thoughtful and thorough look and certainly unique look at gold.
Oh man, the bar gets set. All right, let's dive into it. So something we haven't talked about in a while has been gold prices, which have had a really solid year. Gold is up around 35% this year and has a really strong last about month. The last month, it's almost up about 10%. We often are focusing on what the equity market is doing, what mega caps are doing, foreign international markets, but we don't often get to focus a lot on commodities, but they've actually had a really interesting year, specifically precious metals like gold. And so one of the charts that we always want to look at, or I always look at least, is when we start seeing gold making new highs, we want to see if it's getting confirmed by being priced in other commodities. The reason that's important is there can be changes in the prices of commodities based on simply just off the changes in Forex, the change in the current underlying currency. So when we start seeing gold move higher, we want to know, is it just because something's going on with the US dollar, or is it true demand for the underlying currency? So what this chart has on it is looking at gold and US dollars on the very top, and then looking at gold in yen and euro and the franc, and then the Aussie dollar in the bottom panels. And what I've done is plotted a green arrow every time one of them makes a new high. And so when we start seeing gold make high in dollars, we ideally, if we're bullish on gold, we want to start seeing it making new highs across the other major currencies as well, which it has been doing. And so we are getting that confirmation, at least from a currency perspective, that the move in gold is likely a result of the increase in demand for the underlying commodity, not just an impact of the underlying currency, which is a positive. And we're continuing to see gold prices continue to be strong and moving higher, and we continue to remain constructive on our allocation and our viewpoints of gold. And it appears that it's not just those traders that are doing so in dollars, it's being strong across currency markets, which is, like I said, is a positive sign for gold prices.
Yeah, see, and Andrew, I had no doubt. If you turn to any news channel you want, and they're talking about gold, they're not unpacking it currency by currency, and I think
Right.
that's important to do. So well done. Thank you, and thank you to all of you for giving us your time. We sure do appreciate it. As always, if we can be of service, don't hesitate to give us a call, 800-928-4001, or scan the QR code and do so electronically. And believe it or not, we're just a week or two now away from our Thirdlies, and hope to see many of you there. Take care and have a great weekend.